So, ladies and gentlemen, welcome to our 68th IREPAS meeting. And welcome to Doha. In fact, this is not our first time in Doha. I guess we had it almost like 20 years ago. But before I start my speech, I would like to express my deepest condolences for a great friend that we have lost last Thursday. His name was John New. He was one of the pioneers of the scrap industry, especially for the export. Unfortunately, we lost him at a very early, unexpectedly. His funeral is going to be today in New York. May God rest in peace. So as I said, we have been here in Doha for 20 years ago. The city was totally different. Even I was here 5 years ago. Again, it was totally different. So the city is improving in such an unbelievable way and getting more and more beautiful every time we see. And I believe we thank those who contribute, especially to Qatar Steel, for the contribution to this. 2012, as you know, was not an easy year. It was, to my opinion, was the most difficult one. Even compared to 2008, I believe 2012 was more difficult, and it was really sort of a survival period. But again, I see the same crowd, so I believe we all succeeded to come through in such a difficult times. There were three main topics that the world have discussed during this period. One was, of course, the crisis in the Eurozone that we also been discussing for our last two meetings, and the slowdown in Chinese economy, and the fiscal cliff in US. By the end of last year, we thought these subjects were over, and we were quite optimistic when 2013 have started. And we all had a positive outlook. Although lately the elections in Italy and the budget debate in US has brought some clouds to this, at least the bright skies, but I still do not feel very pessimistic, because according to the World Steel Association, the world will be consuming 3.5% of more steel in 2013. Only in EU, European Union, I believe, they will consume less than what they have consumed in 2007. It's going to be 95% of their consumption based on 2007 figures, but the rest of the world will show a growth. There are very bright spots, especially this part of the world in the Gulf. There is huge consumption, and it's growing very fast. Besides, also in North Africa, in the whole African continent, also in Latin America, the future looks quite positive. I guess in steel industry, our main problem is the capacity utilization for the last 3 or 4 years. The European producer has the production discipline, but unfortunately in other parts of the world we are still adding some capacities and trying to push the productions, which at the end of the day is eroding our margins. And we end up doing all this operation, millions of billions of dollars, without making any profit at the end of the year. So I believe what we have to do is concentrate more on our cost issue and try to work as much as possible to stay in line of supply and demand equation, so that we can at least bring some margin or healthy grounds to our industry. Because adding capacities, in fact, helps just to increase the demand on the raw material, that brings the raw material prices up, or increasing the supply of the product that puts pressure on the price of the product, that at the end takes away the margins that we should achieve. And the other trend, or danger I should say, that we have started seeing this year in 2013 is the protectionist movements in certain areas. Just recently, Egyptians have imposed safeguard measures despite the free trade agreements that they have signed with various areas. The Moroccans have just filed for a dumping case with, to my opinion, again, no solid ground. Russia, for example, they have joined the WTO, but they still insist imposing export tax on their scraps. I believe protectionism can only help in the short term, but bringing walls to our environment in the long run is not going to help. In contrary, it will harm our economies or our industries. As IREPAS, we believe in free and fair trade all around the globe. I believe we should focus on how we can improve our industries being more efficient, more competitive. That would help to grow on a healthier ground. As I said, there are still very bright spots around the world as far as steel consumption is concerned, one of which is the area now we are holding this meeting. Qatar is growing so fast, it's consuming more and more steel every year, which also applies to the other countries in this region. And I sure believe after some of the political issues being resolved in the region, there will be more consumption in the area. I hope the Syrians can find their peace among themselves very soon, so the market opens up again. And the world come to an agreement with Iran, who is a big market, so that at least we see that market opens up. This will all bring nothing but benefit to our industry. Africa is again a huge area, and we already have realized the improvements in the northern part and the improvements in the rest of the continent, Latin America as well. So I like to, make a conclusion that although there are some negative aspects of 2013, but I believe we should concentrate on the positive sides, as we always say. Keep in mind that we also have to do whatever necessary to be done at our sides as professionals or as individual companies. Our next meeting is going to be in Istanbul. It'll be the 30th anniversary of IREPAS, which is very important. So we are trying to prepare a nice, good, memorable event in October. And I would like to announce the 30th anniversary of IREPAS is also my 10th year. So I believe it's time for me to hand over this job to another colleague who would, I believe, take to a different level. So I would like to thank you at this point and like to see all of you in Istanbul. Thank you.
Thank you, Mr. Chairman. I would like to invite Mr. Ahmed Al-Ansari to his welcome speech.
Assalamu alaikum. Good afternoon, everybody. I would like, in this occasion, actually, to thank the organizers, actually, for selecting our lovely city, Doha, to be the place for the meeting. Also, in this regard, I would like to convey the sincere appreciation from our top management, especially Mr. Ali Al-Mughram, our Director and General Manager, hoping that you will enjoy your stay in Doha and hope that you will have like a better idea about Qatar, and then you can compare Qatar today and then what we will see of Qatar in 2022 when we will hold the World Cup, actually. Thank you very much. Wishing you a happy stay in Doha. Thank you.
Thank you very much, Mr. Al-Ansari. It is also my great pleasure to welcome you all on behalf of the SteelOrbis team to the #1 event for the long products in the world. This is as Mr. Chairman mentioned, this is the 68th IREPAS meeting, and it's been 8 years that we have been organizing this event together with IREPAS in conjunction with IREPAS meetings. I also would like to thank you all. Would like to thank all of you for your continued attendance. It is your participation that makes this event so important and so valuable to the industry. On this occasion, we have got 75 representatives registered for the meeting, attending the meeting, representing 29 steel producing mills from 11 different countries. And on the raw material supplier side, we have got 19 representatives from 14 different raw material suppliers. Obviously, it is through the attempt to make sense of the steel market that we reach important decisions, explore new opportunities, take new risks, and develop new relationships. In short, this is how we grow worldwide. I'm hoping that this event will enable us to learn more about the industry and share our experiences. Once again, I would like to thank you all for your participation. I also would like to thank our distinguished speakers who will share their expertise and knowledge with us during the course of these 2 days. I also would like to thank our sponsors, starting with our platinum sponsors, Qatar Steel, Liberty Commodities, Conares Steel, Hadi International, Al-Wataniya Steel, and Nucor Trading for their unstinting support. Today's program will commence with a keynote speech by Mr. Marti Subirana of Celsa Group. He's the commercial director of Celsa Group, and as you all know, he's the chairman of the Rebar and Wire Rod Suppliers Committee. So I would like to invite Mr. Marti Subirana for his presentation of global macroeconomics and long steel products market.
Good afternoon, ladies and gentlemen. It's a pleasure to be here. Thank you, SteelOrbis, to giving me the opportunity to do this presentation again. Thank you, all the sponsors, obviously, to help to organize this meeting, and thank you to all the people in Qatar for the great hospitality. Myself also is my first time in this country. It's the first time that I'm in this city, and I've been really impressed about how vibrant the city is. And if all those changes that you mentioned are happening, we'll have to come more often, because if not, obviously, if you take a long time to come back, you find just a different city. So we'll probably have to come to this beautiful city more often. So the title of the presentation is, as usual, Global Market Situation and Forecast for Long Product Market. Okay, those are topics that we're going to touch. Macroeconomic situation first, then steel and long product consumption. We'll go then to the rebar market, and we'll talk about international price situation, and just to end and sum up a summary and outlook for the future. Okay, if we go to macroeconomic situation and we start having a look at what it is the global economic status, we would say that in 2012, global economic growth was slightly under expectations. So things get complicated by the end of the year with all the, especially the European crisis. So the growth was slowed down. But for 2013 and 14, the forecast is that recovery is going to be there. Although in the latest forecast, those are figures mainly from International Monetary Fund. On the latest forecast, they have reduced by 1/10 what they were expecting 1 quarter ago. What is true is that policy actions have a lower risk of financial crisis in Europe. Obviously, coming from that part of the world, I can tell you that is a fact. I mean, you can feel that financial systems now in Europe are more solid, and even our currency is more consistent. And also in the US, although on the last recent days, there is this danger of budget cuts but it doesn't appear that the financial markets are giving a lot of importance to that. So if we consider all these factors, we can see that in 2013 the forecast is world economy growing 3.9%, and a little bit better for 2014, up to 4.1%. If we now try to, another point that is good to mention because it's supporting this forecast is that if we have a look at manufacturing, we can see that PMI figures continue to suggest that global manufacturing activity is gaining momentum. In January, the global manufacturing PMI increased for the 5th consecutive month and reached the highest level since March 2012. And if you see the lines below, you know that this index above 50 means that an economy is in expansion, and below 50 is in contraction. So the only line that is below 50 is the one that is showing or that is reporting what is happening in the euro area. All the rest are above 50, and most of them, they are pointing up. So that's obviously good news. Let's go now, let's have a look at what's happening in the advanced economies. US economy shrank in Q2 2012, but that was due to very special factors, especially hurricane that hit New York, and also very deep cuts in defense expenditure. In fact, consumption and investment grew at a stronger pace in Q4 than Q3. In Europe, economy is still weak, but there are signs of turning point in consumer and business confidence, especially in the northern economies. But obviously, well, you know that the big engine in the economy, in the European economy, is German economy, and German economy is showing those figures of improving confidence. While Japan has slid into recession, stimulus is expected to boost growth in the near term. And if you then go to the figures, we see what we expect for USA. We expect 2013 being a growth of 2%, and then in 2014, 3%. And in fact, all the figures coming in recent days, unemployment, even commercial deficit, are showing that economy is improving and is heading up. UE is the part that is not as good yet, but well, we think that after the consolidation of the financial system, economy will follow. As a important part of the UE, I show the figures for Germany, where you see that basically is coming out of recession that it was in fourth quarter in 2013 and 14, with 0.6 and 1.4 growth expected. UK also forecasted to grow. As I said, Japan, big stimulus plans there, a lot of money into the economy, so the expectation is that at least they will stop or they will avoid it going into recession. And if we take all together, all advanced economies, we see that as a total, they're going to be growing in 2013 1.4 and 2014 2.2. If we take now the emerging and developing economies, this is let's say the brightest part of the picture, because they are on track to grow 5.5% in 2013. Living indicators, they continue to suggest a turning point in China and in India, and maybe a little bit of weakening growth in Russia. Also, China, that is also a point that is always very carefully monitored. There are some good news in the recent days. In fact, in January, the government in China injected into the system $400 billion just to stimulate the economy, and that is the record ever. $400 billion into the system. So the new government is really taking care of the economy. So if we go to the figures, we see MENA growing, expected to grow 3.4 in 2013 and 3.8 in 2014. Obviously, and we'll see later the presentations, GCC being part of MENA is doing much better than that, and as I say, we'll see in later presentations. Russia expected 3.7 2013 and 3.8 in 14, and China expected to get back to over 8% growth, both in 13 and 14. Asian, very, very solid. The dynamism of and the economic fundamentals in Southeast Asia are good, so they're going to grow over 5%, both 13 and 14. And so for the total of emerging and developing countries, we see, as I said, 5.5 in 13 and 5.9 in 14. So if we put all together, as I say, global growth is projected to increase during 2013 as factor underlying soft global activity are expected to ease. If crisis risks don't materialize and financial conditions continue to improve, global growth could be stronger than projected. So let's put it this way, this is a little bit conservative. Just a few good things need to happen for those figures being better. Also, a graph that is always good to monitor is what's happening into the construction industry, because obviously construction is one of the leading industries for our business. And in 2012, construction remained depressed in EU, showed some pickup in NAFTA, and a significant performance in South America and strong momentum in emerging Asia, although at a slower pace in Q3. So basically here, well, you see the NAFTA and Europe are the lines on the bottom part of the graph, and Europe is still struggling, going down. NAFTA low but going up. The rest of the areas are clearly good, doing a good performance and going up. Okay, let's go for the steel consumption. First big figure is what happened to the steel consumption in 2012 and what's going to happen in 2013. So world finished consumption is sustaining a consistent uptrend since 2009 and is forecasted to continue in 2013. In 2012, we went over the 1,400 million, what you call billion in certain languages, so it's 1.4 billion tons. And basically, growth, although is in the top, it's the top part of the graph. Significant growth in MENA countries. Growth in China, and not so much in developed countries. For long products, which is the main issue of this presentation, the consumption is showing a stronger pace of growth and is gaining share in total steel consumption. So growth of long products is stronger than the general growth of steel consumption, up to a level of, in 2012, almost 150 million tons. If we split it in areas, Asian markets are supporting a consistent long-term in longs. Market in South America and MENA countries are also contributing to this growth in recent years. So basically, this is the consistent thing happening in the last years, is that consumption is moving from developed to developing countries. If we take it by areas, that's what happened in 2012. So long products recovered in North America and basically accelerate the fall in Europe. And those are the more relevant things we see in this graph. North America went up 7.4%, Europe went down almost 10%, CIS down 4%, and Asia basically as a total up 8.5%, and rest of the world 4.1%. That means for a total global 5.8% up for the totality of long products. If we split it by products, we see that reinforcing bars are the big winners, gaining share in long product consumption mix. So the product that grows the most is reinforcing bars. Now we're going to see product by product in the long product range. If we start with rebars, good construction activity in emerging and developing countries powered a remarkable almost 10% growth in reinforcing bars. We say that North America was still suffering of poor business condition in construction sector, and the figure for Europe shows how bad BUT, how bad business was there. So we went down in rebars more than 8%. So total for the world was 10%, remarkable the 14% in Asia. Sections. Drop in consumption again was significant in Europe. We are in the headlines, Europeans were here in the headlines for everything. North America and Asia stayed flat, and good numbers came from emerging economies where sections were gaining its place in construction markets. That's something that if you touch, I mean, if you go to the street, if you go to see your customers, if you go to different markets, that's what you see. Markets where sections, the presence of sections in construction was purely almost non-existent, is really developing. Obviously, that has to do with the development of industry, because sections is a construction process that needs a little bit more industry behind, but this is a fact. So this was a remarkable thing in sections. The rest of the world grew like 5%. I just see the disaster in Europe, 12% down, and almost flat for the whole world. Merchant bars, improvement of economic dynamics in North America was reflected on very strong number for merchant bars. Rest of the market stayed gloomy, and world consumption went down 5.8%. And just to finish this section, wire rod. Industrial production improved in North America, fueling wire rod numbers. And the world number were weighted down by market fall in Europe, CIS and Eastern Europe. So North America up 15.3%, Europe down 6.6%, same as CIS. Asia up almost 10% for a total of 7%. Okay, so let's go now to the rebar market specifically. World, and something that I repeat what I said a few slides before, world reinforcing bars market growth is supported mainly from developing economies. Reinforcing bars consumption is consistently moving from advanced to emerging markets, so the center of the world in this product is moving basically to the east. You see the growth in Asia. This is the green part. This green column is getting bigger and bigger. This is also very interesting. I've put here the the graph for the main, put it this way, the main producers and export suppliers. So, okay, figure for China is, that's what I got, but in China you never know. It appears to be balanced. That's what it's in the books. North America is balanced. In Europe, due to the reduction of market, I think that in some markets, like Spain, the market has gone down in 4 or 5 years, like 70 or 75%. So due to reduction of markets, and although mills there are really trying to adjust capacity to what the market is taking, we are still we have an excess of production. So it's 12 million tons against 9 million tons of consumption. CIS and Eastern Europe, it appears now to be more or less balanced, maybe 1 million, 2 million imbalance. And then again, the big extra production is in Turkey. The message for the slide: reinforcing bar producers should always adjust their productions, maintaining a reasonable demand and supply balance in any market they are present. I mean, that's a point that was mentioned before. I think that, and we'll see in future slides, margins are really tight and historically low. So, I mean, we need to find ways to restore those margins and make profit. Okay, let's talk about international price situation. This is more along. That slide doesn't pretend to be a online price information. It's more trying to show what is the trend, long-term trend in rebar price. So the summary of the slide is: after a long period of consistent uptrend, price of rebars appears to have entered a sideways movement, sustained by a strong raw material price. If we now put on the game the spread, after the market drop in 2009, prices are recovering nicely due to increasing demand, but a strength in raw materials keeping margins very, very tight for rebar producers and need to be recovered. You see the red line? This is margin, and for the last 2 or 3 years, it's been consistently going down. Okay, so let's go for the conclusion and sum up of the presentation. As a first point, I would say that we need to be optimistic. We clearly think that 2013 will be better than 12. So global economy seems to be turning the point and now heading upwards, with developing economies being clearly at the front seat. MENA, Asia, Central and South America, markets are growing strong. I would include here Africa, which is also performing well. And in terms of developed countries, markets in North America are also showing some momentum, and EU will be back showing positive signs at the end of this year. Point number 2, long product consumption kept growing in 2012, supported by markets in Asia, MENA and South America. Reinforcing bars grew stronger than any other long product average, clearly taking share from sections. Reasonable industrial production level helped wire rod growth, and although in the second part of 2012 markets slowed down, seeing signs point now for markets regaining momentum in 2013. So our expectation is that markets in terms of long product will be gaining momentum as the year goes. Point number 3, margins for long products has been squeezed even further in recent months. Mills should adjust productions, keeping a reasonable demand-supply balance in any market they are present. A recovery of margins is first priority. I think all of us, we want a healthy industry. And just to finish, as a consequence of general improving demand, raw materials costs and margin pressures, price levels, we believe they will move up, although volatility and short-term change in price direction will be present in the trade, as has been like that in the last few months, or maybe 2 or 3 years. Okay, ladies and gentlemen, that's all. Thank you for your attention.
Thank you very much. Are there any questions from the floor for Mr. Subirana? We have got one question over there. Do we have the microphone somewhere? I cannot see. Yes. On the first, yeah, first row.
Thank you. Boris Sharsal from Prime Magazine. In 2012, finished steel exports from the EU 27 increased by 4.15% compared to the previous year. Mm-hmm. What is your expectation regarding steel exports and imports in this year in EU?
Okay. The long product markets will still go down for this year in Southern Europe. So if you talk about countries like Europe, Portugal, Italy, and maybe even Greece, the tons that the domestic mills will be able to place in the local markets will be less. How are we going to solve that? We're going to solve, again, we try to adjust our production to the new levels, but I guess that some of the tons will be in the export markets. But with a clear concept, we are not, European mills, we are not after the tons. We are after tons that give margin. So that will be done very, very carefully. So increase, but not without, out of control.
Thank you. Any other questions from the floor? Guess none. I cannot see any questions.
Okay, thank you.
Thank you very much. So, yeah, it is a huge problem that we see in the global market, that there is still excess production in the market, that mills still need to work on it to adjust their capacity utilization and the output. As Mr. Kim Marti has rightfully pointed out, recovery of the margins is the first priority. Well, obviously, as we gathered this time in the beautiful city of Doha, the first session of this meeting will be focusing on the regional markets. We all know that the situation in regional markets is a little bit better than the rest of the world. First of all, I would like to invite Mr. Adel Al-Mughram of SABIC. Mr. Adel Al-Mughram is the Senior Marketing Manager of SABIC, and he will be sharing his opinion, his views on the Saudi economy and steel markets. Mr. Al-Mughram.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Ladies and gentlemen, first of all, real appreciation and thanks to SteelOrbis and IREPAS for their beautiful and professional gathering event. Real thanks to them. And special thanks to this welcoming country and their people, which is Qatar. I appreciate Mr. Yilmaz's opinion that I have just very precise slides to share it with you, reflecting our opinion. And we hope that we discuss it after I finish my presentation, and we learn and we adjust from your professional views. Mainly, I will discuss 3-4 points. The first one regarding the economy of Saudi Arabia in general. Then I will hit 2 important points, which is asked many times during the morning sessions, during the committees, regarding the Saudi demand and supply balances and prices and related issues. We will discuss it in a very summarized way. Friends, I brought this slide related to our capacities and capabilities just to announce that we added to the picture new line, which is the new road mill with a capacity of 500 to 700 in the finished product, long product. It will give us a capability to produce 4 million during 2013-14, and the commercial production will start next quarter. And this will be fed by a new melting shop in the long product side to give us a capability of 4 million, which is also in the final stage of commissioning. Otherwise, the flat product still it's as is, 2.2 million, which is from the iron ore to the finished products, hot rolled, cold rolled, galvanized, and pre-painted. And 4 million with the new line in the long product. Regarding when we want to speak about Saudi economy, we have to consider the most critical and emphasized factor, which is oil. This is why maybe you will see in the second or 2-3 slides, all slides related to oil effect to our economy. We know that our capability daily production of oil in Saudi Arabia, it is around 11 to 12 million barrel per day. During the 2012, we concluded around 9.7 million tons of million barrel per day, and the prices was around $110. Our expectation for the current year, it will be around 9.5, and the prices will be around 105, which is very healthy. Something very important happened, which is the political turbulence in our region. Everyone knows that because there is an action taken by Saudi Arabia government that they guaranteed for the OPEC their capability of covering any shortage coming from anywhere during that time. Otherwise, maybe we saw much higher levels of oils prices. The second thing that we have to consider is the announcement of the government for the budget of 2013. It is a very important factor to us as a steel maker because it's the main channel for the distribution and consumption of the steel from SABIC and from others local producers, and including for the healthy and big quantities of imported material. If we start, we have to measure the GDP. The number here, which is almost 5% or 4.8, this is announced before the end of December. And just before 3-4 days from the Ministry of Finance, they announced the concluded number for 2012. It is very high number. It is around 6.8, which is very positive. And the good news, when we measure the GDP, during 2012, it was came with a negative inflation percentage on the levels of 3%. We tried to give you a very simple shot of our main consumption of the budget and orientation. And we try to summarize where it will go, which is related to consumption of the steel. We saw it is mainly for education, for telecommunication, for municipality services, and for infrastructures. Those are the 5 main channels of the budget for 2013. And this gives us a confidence that we have a very strong year of related products like steel. Again, steel and oil, we will discuss during the coming 2 slides, a link that we usually consider it when we measure the future regarding the prices or the strength of the demand or what will happen. It is not the only thing, but we think there is a link between the steel and oil prices and production trend. We try to measure it and analyze it since more than 11 or 12 years. We think there is a link. We will show it to you, and this is our opinion. If we measure like what Mr. Kim announced regarding the global production of steel, during 2012 it is around 1.5, almost 1.5 billion ton of steel. And if you just see the trend from the last 12 years, we can see a relationship between the total steel production and the oil average prices. And this will give you a hint, just a hint. In the future, when you want to just project, which is very difficult in our field to project the future, and I appreciate the conservative way of Mr. Kim regarding the future projection. He just put 1 year, and sometimes in some of the slides, he added 2 years, 2013 and 2014. And I think this is a very mature way because nobody can judge the future, whatever the tools he has. And it's proven during the years, previous years, the moment you start putting 5, 10 years, it is totally unrealistic. But consider this in the future. Same thing if we go down to our country, when we see the rebar consumption and we link it to the oil average prices, there is a very strong relationship. Without reading the numbers or whatever the trend, it's very clear. Maybe 2008 is totally interrupted year, and nobody can judge to it. The second graph also, it is just a hint to see sometimes and measure, and maybe it will help us in the future. If we see the main thing, which is the oil average prices, for example, in 2012, as we say, it is around $110. And the average rebar international prices, it is almost 600. If you just go back all the years, you will see a link. Just consider it in the future. Without going to the short-term analysis, just in the medium and long term, then you will have a good correlation. Now to the difficult part, which is the prices. Just to summarize the 2012, and maybe I will speak a little bit about the years before and our projection for the coming 2 years. Simply for the 2012, the main factors affecting the prices, we think it's a weak economy in Europe in general, and the decrease in scrap prices. Because if you just remember, it was around average in the first half of the year 2012 on the levels of 440. Then it went down by minimum 13% to the levels of 385. And this is important factor that affected the whole movement and demand and supply of especially exported quantities in the area. And besides that, we have to remember the Chinese role when they had a little soft growth in their local market. They started exporting some quantities if we link it to their big capabilities, but whatever, they affected the market negatively. If we just also measure the performance in one word of 2012, we can say it was lower than 2011 by around 10%. And that's exactly what was mentioned by also Mr. Kim. For the price history and price projection for the current and coming year, just from this trend, we can say the 2008, it was corrected before and after, which is to the normal situation with little negative impact. Then we had a good trend till the end of 2011, and everyone agreed about this one. Then we have a softness in 2012, and we think, because maybe we heard too many different opinions regarding what will happen during 2013 and 2014, especially up to the end of January. It was very negative. Everyone was assuring that we will have a very bad year, especially from China, negative growth, which is at that time, everyone was expecting it will not exceed 7.8, which is same as the previous year, and from the USA side. But now, today, maybe this is the first presentation I heard, which is also from Mr. Kim, that numbers are adjusted to a positive trend. Especially, let me be very precise in long product. I totally agree with you. We think, as a view of SABIC, that we have a moderate year for 2013, 2014. Maybe we'll see a little softness in the iron ore side, maybe in the coming months. But in general, it will be a little bit lower than the averages of 2012. But we can say it's stability for this year and the coming year. Too many friends and colleagues this morning, they asked me about the supply and demand equation. I have a very simple, you see it's only two slides, one for the Saudi and the other one for the Gulf. But we measure it with a very conservative way. We are trying to recalculate the supply and demand every single month. For what you will see is our opinion, and it's for discussion. During 2000, just to make it very simple, we tried to provide 6-7 years performance, including the future. But this year, it is, I called it this morning a transformation period. Because we have a capacities maybe near to the consumption, which is very positive, very high. The consumption in the kingdom concluded 2012 with more than 21%. And this is very high percentage for a country like Saudi Arabia, because we believe and we exercise the steady way, because usually we don't have a real estate virtual business. We have a real requirement for housing. We have a real requirement for infrastructure and government facilities. And this is give us the confidence of the real growth usually in our country. But 2012, it was a distinguished year. This is why we concluded a very high demand jump from 2011 to 2012 with more than 21%. However, this year, which is the last year, concluded with an imported material more than 2.5 million ton of finished product for long product. And this is not because we don't have a capacities. We have some capacity, but unutilized. But we think in 2013, maybe from the second half, And this is not a message, just it's our opinion and from what we see. That picture should be changed a little bit. SABIC Hadid or Hadid SABIC, we have a new rolling mill of capacity from 500 to 700. This is wire rod, as I mentioned in the first slide. It is now in commissioning. Maybe within 1 or 2 months maximum we'll start the commercial production. It will double our capacity of wire rod to a quantity which is more than the kingdom requirement. The kingdom requirement in 2013, it will be around 1.35 maximum. And we will have a capacity of wire rod of 1.5 million. And this is very big question mark. Beside our other colleagues, Al-Ittifaq and Al-Rajhi, they have a new facility. It will add up some capacities to 2 million. It is maybe a small market, but this is very critical to our country. If we do not include any other influences like Egyptian or our colleagues in Emirates or Turkish quantities, which is very rare as a wire rod, neither nor the Chinese. For the whole market, next year, maximum, if we didn't see the real activation of the capacities, in 2014, we will have a gap, unbalanced equation between the demand and supply for the local producers with more than 1.7, 1.8 million ton of additional capacities. Always there will be a room for imported material, but if we have a free market to export some quantities, but it will not be, we think, as much as quantities that we saw during 2012 especially. If we see the Gulf, it's totally different and very difficult situation. I will not speak about the past. Let us just speak about this year, 2013. We have an access capacities of more than 3 million minimum. And there is some imported quantities because some of the capacity are not utilized. It will be my pleasure to discuss in details all related trends. This is just the summary, and thank you very much, and enjoy your time.
Thank you very much, Mr. Al-Mughram. Are there any questions for Mr. Al-Mughram? There are a few questions. Can we have the microphone, please? Let me start with Sandeep Rao. He was the first to raise his hand, so yeah. But I'll get your questions as well.
Mr. Adel, thank you. It was a very nice presentation. But there's one question which I have for the last 2 slides. Okay. In this, you're projecting the capacities of Saudi Arabia and the rest of the GCC. Do you have any numbers on what's crude steel capacity and what's rolling capacity, or are these just rolling capacities that you are talking about?
Thank you, Mr. Sandeep. It is a very important question, and I think, at least to my understanding, the crucial point of this point, you mean the real competition should come from the liquid steel. Because the numbers here are reflecting, you are right, the finished product, which is only the rolling mills. And in this time, which is very big competition, any plant without at least a melting shop, they are in a very dangerous situation. We have all the numbers for the liquid steel. I don't have it now in mind. I don't want to say it in Gulf or Saudi Arabia, but yes, you are right, it is less than those numbers, because the numbers here are reflecting the finished rolling mills, including some of the small, especially in Saudi Arabia, 200, 300, which is more than 4 or 5 mills, depending on what they call it. Sorry? No. For this steel, just they are depending on the scrap, and they are have a very simple process of melting the scrap. But I don't have the numbers here. Induction furnaces, you are right. Yes.
Okay, thank you.
Not at all.
Thank you very much. I guess Mr. Navre, right? I cannot see you. It's very bright. Sorry.
My question is, in this particular chart, you're showing in 2012 that there is a match between capacity and demand of close to 9 million tons. But you also said that close to 2 million odd came from Turkey, and there have been exports from UAE and other places also. So what would be the reason for that? If there's a match between capacity and consumption, then why should so much material be coming into Saudi Arabia?
Yes, you are right. This is related to Saudi Arabia. We have a big capabilities with big capacities in some of the plants, but they are not utilized. I will give you a very simple answer. If you go to Turkey, as they mentioned this morning, the maximum utilization of their production capabilities is 70 to 75%. This portion is near to the situation in Saudi Arabia. We have some total capacities are shut down for different reasons, but they are not utilized. But the other part, maybe Turkey is open. They can import and export. In our country, we cannot export. We can, but very difficult to export a single ton of rebar. This is why, and the prices in our country is very attractive. This is why there is a big opportunity and chance for our neighbor colleagues and countries to import to our country. And you are right, more than 2.5 million tons imported in a year, which is 2012, where there is almost a new capacities maybe just started, maybe matching the demand.
Thank you. I guess it's your turn.
Mr. Adel, presentation was very good. I have only one question regarding the relationship between crude oil and rebar prices, which you have shown. But if you see 2011 and 2012 in the presentation, there is quite a gap. If you see the correlation is not that very significant. Is it because the crude oil prices today are maintained at a higher level, or there are other factors which has actually pushed down the rebar prices, which has actually resulted in the link which was there throughout these years being out? If you look 2011-2012 gap between the rebar and the crude oil prices, they've actually widened. Have you looked?
Sorry, here there is no prices. If you speak about another slide, I will go to it. I didn't get you. Here there is no prices.
The rebar, do you have compared the rebar prices with the crude oil prices over the years?
You compared.
I think historically you have compared.
Okay, I will go down. I will go back to it. Yes, this Saudi Arabia.
Exactly.
Yes.
International rebar prices versus oil prices. If you look 2011, 2012, they have left the gap, there was close correlation from 1985 till 2010. But
okay.
Since then, if you look, the prices have shot up for oil.
Yes. Friend, simply I said something very important, at least to our measurement. I told you this is not a direct factor that you can look to it and then you measure your short or medium term strategy of deciding your pricing strategy or projecting the future trend. This is only for the macroeconomy for the long term and maybe to the medium term. You are totally right. Many years either below or above the oil prices comparing to the rebar consumption. But if you take it as a long term, you can draw a strategy. You can know if you want to do a 5 years or 10 years strategy, just go to the banks, go to institutions of the people specialized in oil, and I think or we think it will give you an indication that one of the good factors that you can measure only, not more than this. But if you go deep and analyze year by year, yes, you will see differences. But there is a correlation. I hope I answered your question.
Yeah, I accept that fact. My only concern was to draw a direct relationship at the current moment. We always see the risk of having high oil prices today held up because of supply constraints. So that could be one of the factors. You see, if you have everything in the same way, if conditions remain the same, there is a good correlation. But if there is something which is extraordinary, which is the reason, so I thought probably you have some inputs on that. But as you said, of course, we can analyze it from the point of view of taking various other factors also to draw a conclusion for the future.
I totally agree, and you are right.
Thank you. Let's have one last question for Mr. Al-Mughram. Yeah, one last question. Yeah, please go ahead.
Back to the dichotomy between capacity and consumption, Mr. Navre's earlier question. You are showing that while in 2012 capacity and consumption are approximately 9 million each, going forward capacity will go up as a premium on consumption to almost 2 million tons. Do you think in such a situation in the next year or two Saudi Arabia will start exporting to neighboring or other countries?
If you just take it by nature, fair business, fair trading, the answer is simply yes. And Saudi Arabia, just before 2009 maybe, or mid of 2008, please correct me, for the last 20, 30 years, at that decades and years, our production and local producer were very little, but we used to export every single year. I measure it for the last 20 years. Quantity equal to whatever the quantity we imported, we exported exactly the same quantity, which is, even if you look to the China, just to make it a real measurement that we can see the nature of the business. China is producing half of the total global production, and they are importing too much quantities from everywhere around the world, including Hadi SABIC, and they are exporting some quantities. This is the nature of the business. Therefore, yes, we will come back. It's not a threat. This is the nature of the business. Always you will find a way to find the customer. They require your material. And I think a very important, at least listen to me, I heard it from Mr. Orr just this time when he said effectiveness and efficiency. He said we have to be effective and we have to be efficient. Any player of us who put this in front of his strategies, I think he can export some quantities in this tough coming period.
Thank you.
Not at all.
Thank you very much indeed. Thanks a lot for this very interesting presentation, Mr. Al-Mughram.
Thank you very much. Fantastic.
Our next speaker is Mr. Juma Al-Mansouri, the Assistant Vice President of Emirates Iron and Steel, and he'll be sharing his opinion on the MENA market with us. Mr. Al-Mansouri.
Assalamu alaikum wa rahmatullah. Good afternoon, ladies and gentlemen. I would like to thank SteelOrbis for this invitation to present a paper in this conference. First of all, I would like to share with you a short story which might be interesting to you, and I guess some of you also have heard it once from me. We all in GCC concerned about the new projects related to transportation, especially metro, railway, monorail, I had an experience in 2010. I was traveling with my family in Europe, and I was in Austria. So we decided to go from Austria to Prague, trying the train. But, and we were 3 adults and 2 kids with 5 suitcases. So traveling in a rail or a train is not simple as we're traveling on an airplane or in a car. So I'm sorry I'm starting with this, but it little bit remind me about the last 2 years and using different transportation. So we lifted in a place called Bad Gisten in southern of Austria. We changed the train in Salzburg. So there was a little bit hurry to get out of the train and catch up the second train. So I was a little bit concerned about the kids. You know, am able to get them out of the train on time and get the second train, or I might miss one of my suitcase, or maybe my wife, I don't know. But on the second stop in north of Austria, it is called Linz. So when the train stopped, I was a little bit uncomfortable. I said I'll pick up my kids and my wife and my sister, get them out of the train, and then I'll pick up the suitcase. But unfortunately, my wife said, please get the suitcase and then we'll bring the kids. But I said, no, I'll bring the kids first, you guys first, and then I'll catch up with the suitcase. So after I get out of the train with my family, I left my jacket with my wife. I said, please keep it, I'll get the suitcase. So my passport, my phones, my cash is on the jacket. So I went back into the train. I started lifting the suitcase just to leave the train, and suddenly the train started moving. The door closed and moving. So I was looking to my kids, when the train was moving, and I see them crying, and I don't know where I'm going. And this was the first, first time for my wife to be out of the country, so she has no clue what to do. So anyway, the train traveled for 1.5 hours. And then, luckily, in the way, the ticket guy came to me and said, please, I've seen you with your family and kids, where are they? I said, they are in Linz. And I said, well, where are you going? I said, I don't know. So anyway, he wrote some message in the ticket and said, please show it to the next guy when you're coming back to Linz. So anyway, I managed to change the train on the next station and came back. On my way, the ticket guy came to me and said, please, tickets. So I wanted to show him the ticket, the message which has been written by the other guy. He said, he started punching on the calculator and said, 24 euro. I said, I don't have cash. He said, no problem, credit card. I said, nothing. Anyway, we traveled back to Linz, and so it took me 1.5 hours and 10 minutes over there, and 1.5 hours. So about 2:45 minutes or 2:50, 2 hours 50 minutes. Anyway, just to give you a summary of this story, that yes, there are railway projects, there are metro projects in the region, but we as people are not geared yet for using this type of transportation yet. This is my view only. Thank you. We would start with our presentation. My presentation, I'll try to make it short because I think Yilmaz, we are running out of time. Okay. The content of my presentation, it covers the MENA region, forecast and market and steel making in GCC and Middle East region plus the MENA. So I will start taking you on the forecast from each market in the GCC, starting with UAE market. UAE market, as you can see in the last 2-3 years, considered one of the leading economy in the region, and most of the projects in the country, which on the last two years exactly, I would say, most of the mega projects has been either put on hold or cancelled for different reasons. Either fund is not available for these projects, or investor has decided not to go for these projects, or for a different reason. I wish I can see the screen, which I'm trying to. It's okay. It's okay. All right. I think I need a LASIK surgery to read what I have already started. UAE willing to transform its oil economy into spending a lot of billion of dollars into infrastructure and construction projects, which help the economy across the country. There was lately 6.8 billion airport projects, terminal number 3, which has been awarded lately for a joint venture led by TAV and consolidated contractor and Arabtec. Second phase of 11 billion project Ittihad Railway, which has been already started. They already launched an award, let's say, the contract, and the project expected to start early 2014. Huh? It's okay. Much of the 30 billion projects in UAE, which put on hold lately, it will not see or it will not be utilized on the short term. UAE part of 100 billion projects, GCC projects, railway projects. So part of it we could see it in UAE. I think they've already launched the projects, and we are expecting construction to start by end of 2013. Saudi market, I think it's already been covered by Mr. Adel, but I would like to give you some brief highlights on Saudi market, which we consider this is the main driver economy in the region. So Saudi government is investing around $80 billion in electricity generation, and this is across the last 2 years plus the 8 next years, which will improve the electricity availability in Saudi Arabia. More of $110 billion worth of projects related to construction, residential, economic, buildings related to industry or residential. This is already on the pipeline. A 9th development plan of the country worth $385 billion has been launched for the years 2012 and 2014. Qatar is another market which we call it maybe the fastest economy in the region, in the GCC region. Qatar is planned to invest $150 billion in energy and in residential projects related to their Vision 2020, and also related to projects for the FIFA preparation World Cup. We have seen the first phase of the metro, which has been already awarded, and this for $7 billion. It has already been awarded as phase one. Qatar also allocate 40% of its oil generation, oil revenue, to support their construction and to support their investment on the plan 2020, which is part of it for the FIFA World Cup. Other GCC, Kuwait, Oman, Bahrain market has also had some commitment to spend around $79 billion on their projects related to infrastructure and road transportation projects. Omani government also is planning to invest around $79 billion between 2011 and 2015. We also understood from Oman there has been a movement to shift the economy from being an oil producer and depending on oil generation, oil revenue, into an industrial economy. Also, Oman and Kuwait and Bahrain is part of the railway projects which cover the GCC. starting from Kuwait to Saudi, Bahrain, goes to UAE, and then Oman. Iraq is not a clear economy due to the political situation, but we can say there is a plan on the next 5 years for the Iraq government to spend around $250 to $275 billion in its project. One of the mega projects which expected to come in the near future is the Baghdad expansion airport, expected to spend something around $7.5 million in that project. But we'd say we'll cross our finger that nothing happen in Iraq which will stop such mega projects. Also, there is Al-Faw project, Al-Faw airport, Al-Faw port. It is southern of Iraq, and that's also another mega project for Iraq, which would give the government to invest something around $1.6 billion. And Iran is not also, we're not sure how Iran could overcome the obstacles and the limitation on being an open to the other market and trade freely with other markets. But there are certain projects which I will come later on my slides in Iran. They consider as an mega projects if Iran could overcome their problems. On this slide, I would like to share with you two things. One is the project forecasted and committed in each country, and the green color is the forecasted and the committed projects, and the purple is either the cancelled or put on hold projects. So as you can see, Saudi Arabia is leading the market with around $390 billion worth of projects, which is either committed or to be committed in the pipeline. That's followed by UAE market. But if you see the value of the projects which been either cancelled or put on hold in UAE markets, it's worth almost $300 billion. I will show you later on a different slide where this cancelled or hold projects is been experiencing an improvement lately in 2012. So I will start with the United Arab Emirates. This is basically the slide this related to the previous slide. And this show you, especially on the second half of 2012, the number or the value of the cancelled and put on hold projects have squeezed, and we are moving upward to the green area. Right in the corner, that's the share in the region, which means UAE projects value account for 28.7% of the total GCC project value. Below also there is a number of selective mega projects
either related to construction or related to construction sector. So as I said, one of the mega projects in UAE, which accounts for around $3 billion, is the Terminal 3, Abu Dhabi Airport. And there are a few projects which also related to transportation or real estate, which is also accounting for a high value for the next future. Saudi Arabia, the picture is different. The stability on the cancelled or put on hold projects has remained unchanged, but we have seen on the second quarter 2012 the value of the new projects which is coming to the market has increased substantially. Saudi projects value in the GCC account for 38% of the total value, and account for 33.3% of the value of the project value in the Middle East, and around 31% project value on the MENA region. And below also there is a list of mega projects in Saudi, either these been already awarded or it will be awarded within 2012, within 2013 or 2014. Qatar is also experiencing a same model of Saudi market, where we could see beginning of the second half of 2012 the increase on the project value in the market, and there is a number of mega projects with a value and awarded time also. This is other GCC. Thank you. This is other GCC countries also. Oman and Kuwait and Bahrain is also experiencing the same trend, that the projects are increasing. The value of the projects are increasing starting from the second quarter 2012. And below there is also mega projects, especially there is one, I can call it X mega projects in Kuwait. That is Al-Khiran residential city, expecting to be awarded first quarter of 2014. That's worth of $14 billion. Iraq market is completely a different picture. What you can see is the value of the projects in Iraq market has been declining since second quarter 2012, and it's been continue. Reason could be the nearby country situation. I mean, Syria, Jordan is a market where is related to Iraq, and that could be a reason why Iraq market is seeing a decline in the value of the projects. Iran market is a study, even its low value of the projects. But as I said earlier, Iran is not in a clear economy unless they overcome their problems. Other part of the Middle East is Jordan, Lebanon, Syria, Yemen, and this market I would call it it's a negative market. we have experiencing a low value of projects, and there is also a decline on the number and the value of the projects in this market. This could be due to the political situation in each market, especially Yemen, Syria, and part of it Lebanon. Jordan is also, I would say, it's in one of the nearby markets where it's really affected by the other country situation. Other MENA region, especially talking about North Africa, Algeria, Egypt, Libya, Morocco, Tunisia. Due to also their political situation in the last 2 years, lots of projects has been cancelled or put on hold. And what we have seen lately, only in Algeria and Libya, where there are some projects have seen the green light to kick off. So we're expecting that this to be improved on the near future. Last thing in my presentation, I'm trying to cover the steel making, and I would start with UAE market. The crude output in UAE, this statistic is up to end of 2012. Crude output in UAE is around 3.5 million tons, and basically this comes from two units, is Emirates Steel and the other unit, which is also already acquired by Emirates Steel. It's called Emirates Iron Steel Factory. So all what you see here is 3.5 million tons. That's Emirates Steel liquid production capacity. Rebar capacity in UAE is 3.7 million tons, and there is no time to take you through each mill, but the output, the final output is 3.7 million tons. Utilization is on a different matter. Most of the mills available in UAE are either running with low utilization or totally stopped. Wire rod, we have a capacity of 840,000 ton. And suction, we have a design capacity of 1 million tons as Emirates Steel, and around 240,000 ton for a smaller section in different mills. Saudi Arabia market, maybe I'm not the right judge for their total crude output and rolling mill capacity, but this is basically Emirates Steel bank data. Crude output in Saudi Arabia is around 8.8 million tons, and rolling capacity for rebar is 7.82 million tons. Wire rod around 900,000 ton. Section around 500,000 tons. Light section, light and medium section. HRC 1.6 million tons. Qatar Steel, I would say, if you can correct me, Mr. Ahmed, if my figures are not matching yours, but crude output is around 2 million tons, followed by finished product rebar 1.8 million tons, and 220,000 ton of wire rod, and light section of 120,000 ton. Other GCC, quick. around 106 million tons of crude output, and around 2.85 million tons of finished product rebar, and small tonnage of 150,000 ton on sections. Iran, definitely it's a bigger economy and a large investment on the steel industry, and their output of crude steel is around 17 million tons. Rebar production 3.6 million tons, and 500,000 tons of wire rod, and 4 million tons of section, and 9 million tons of HRC, and 1.45 million tons of HRP. Iraq market is a small market in considering the steel industry. There is only around 925,000 ton crude production. Rebar production is also barely 125,000 ton. There are two market, or let's say two parts. This is already been discussed. MENA region, we're talking about Egypt, Libya, Morocco, Tunisia. Crude output of this region is around 14 million tons, and around 10 million tons of finished product rebar, and 2.2 million tons of wire rod, section around 700,000 ton, HRC 6.168 million tons, and HRP is around 100,000 ton. This I would say end of my presentation.
Thank you very much indeed. Are there any questions for Mr. Juma Mansouri? It was a very detailed presentation, so apparently there are not many questions. Cannot see. One question. Where is he? Oh,
I have actually a very short question. I'm wondering, I know that Emirates Steel has launched a new heavy section mill, and I wonder how it goes. What is the utilization, and how you view the prospects of this segment going forward? Thank you.
Well, thank you for your question. I knew this question will come up on this meeting or this conference. Even my plan was not to go into a section discussion, because this is company decision is not to talk about the section in this conference. But I will try to elaborate with you for your question. Our mill is up and running for the first quarter. We are expecting the mill will ramp up for the second quarter up to around 45 to 50,000 ton per month. We are considering this first quarter around 25 to 30,000 ton output monthly, in a monthly basis. Would this answer your question? Well, in terms of market consumption, our main markets for the year 2013 would be the domestic market plus the GCC, and mainly will be for us in 2013 is just to put a base in the domestic market and the GCC. Also, we are approaching projects. It's not only a stockist market, but also we're looking into entering mega projects in the GCC and in the MENA region. And Alhamdulillah, successfully we've done this task.
Any other questions from the audience? I cannot see any other questions, so thank you very much indeed, Mr. Juma.
Thank you.
We really appreciated the information as well as your opinion, and moreover, more than that, your sincerity. Thank you very much indeed.
Thank you.
So the last speaker of this session is Mr. Hadi Hami. Hadi is the General Manager Middle East and North Africa of Norecom Group, and he's going to go he's going to share a little bit more detail with us on the North African industry.
Thank you, Chairman. Good afternoon, everyone. Let me thank the organizer of the event, and I think let me thank the Qatar to welcoming us here in this fast developing country in this part of the world. My name is Hadi Hami, and I'm currently working as the General Manager of the whole group worldwide with Norecom. We have about 8 offices globally, and we're practically a steel trading company. I have the honor to present here about the Middle East and North Africa, but is more particular focus on North African market, the economy, the opportunities, and I wouldn't go in statistics in details. I'll try to be brief and sector-wise. Mine would be the first in this session, which I'll come up with the trading point of view. I'm not that much optimistic as the other colleagues are here. I see most faces are from production side, but let's see how it goes actually for the coming 2013. We have witnessed in 2012 growth in North Africa was driven by Libyan recovery in the oil exporting countries. Continued focus on broader structural reforms and economic diversification, we think will help generate more private sector unemployment and inclusive growth in that part of the MENA region. In North African oil importing countries, growth prospect for 2012-2013 remain modest, with economic activity apparently below than the potential where it is there. A good volumes of steel imported to North Africa, as we all know, prior to the unrest and political changes in this region. Most of you are familiar with the numbers and figures, but I think we remember about 2.5 million tons of semis and about 5 million tons of rebars were imported to North Africa. In total, about 10 million tons in 2010. However, figures are much less now. The largest downstream risk now emanates from continued political instability in the neighbor countries, such as Syria. And also on top of that, I think Europe financial crisis, as well as lack of clarity on the future of the region. Despite to the expansion plans of Bishay, Suez, Ez, and Al-Marakabi, and recently Misr steel plans in Egypt, it seems that on a long-term run, the country would remain net importer as population grows meanwhile. Once the reform take place, the demand would increase and will not leave room for exports from the country, for long products in particular. On a short-term prospect, Egypt is not a big market for global suppliers. However, in the medium-run outlook, will be the biggest market in North Africa. Algeria. I think we know that import duty policy measures, conflicts, and sometimes these sudden changes in Algeria in the regulation, Europe and Turkey supply competition, and local expansions of Tosyali and Qatar Steel as well, and recently Chinese. Those partly are not operational yet, but they're all into Algeria. And in the reforms in the neighbor countries, North African countries, are the main reasons which would reduce the chance of Algeria to be the main, to remain the main long product destination in the region on a long-term run, including Turkish product rebars and European supply to that part of the world. Tunisia mills have lost significant volumes, Turkish mills have lost significant volumes in their main export markets in the recent years, but have so far been able to find new outlets, selling billets more to new ASEAN countries such as Thailand, Indonesia, Vietnam, and the other part of the world, Americas, Latin America. But how about North Africa? There is no doubt that the Turkish long products exports to North African countries such as Tunisia and Morocco would not reach to 2009 volume of about 4 to 5 million tons on a short-term run. On the other hand, having a footprint in Tunisia with its, though is a small demand, but with its potential to do the land transport to Libya is recommended. MENA has been known as the most critical and important region in the world by many of the international experts and authorities, and has direct and indirect impact in all our business here. Global economy, world supply and demand balance, and etc. Is it more challenge or opportunity for our as a trading side? By the end of 2010, countries in the Middle East and North Africa had recovered from the global financial crisis, and growth rate were expected to reach pre-crisis level in 2011. However, in early 2011, a series of pro-democracy movements began that resulted in swift regime change in North Africa, Tunisia, Egypt, Libya, and spread to Syria and Yemen. The unrest of movements have affected the short-term outlook for all of us and the speed of economic reforms in the region. The medium-run growth prospects are likely to improve, especially if the political changes are associated with more open, accountable and rapid reforms. The result and economic growth depend on how swiftly government can commit to reforms. Growth of oil importers in North Africa was about 2% in 2012. For oil exports or exporter country, about 2% higher. The main factor for the weaker outlook are a drop in tourism, business, and reduced investment resulted by political issues. There are many challenges in the region we all facing in the production side, trade side, but the opportunities are more and more as the region has massive natural reserves and energy. Let's look at some of the challenges facing the North Africa steel industry. Quick changes and power transition in the past show that there are chances, slightly chances, to see more possible uncertain regional power changes. Instability in the Arab world economy followed by the recent regional political issues and the eventual changes in the areas of supply and demand. Iran sanction followed by the country currency devaluation and its effects on the country's economy and the regional steel demand and supply with the lowest figures of the country's imports for the past years. I think we heard in the session of morning about the pricing, how quick the pricing is taking place now. I think if you look at the distribution side in GCC, we see the exposure for steel price volatility and long and varying lead times for imports force them to hold 3-4 months inventory, whereas the pricing cycle, considering the raw materials price dynamics and the other reasons, are much quicker now. Global currency fluctuation and its impacts on the regional imports and export trends. Petrodollar. We have seen in the past years that eventually what happens is the oil and the other commodities being traded outside US, all in US dollar. But now recently, I think, if I'm not mistaken, is about 12 contracts have been signed between the countries that they start dealing in their own currency, which would probably end up with inflation, surplus in US, and the more interest rate on the bonds, and then probably US currency collapse. We don't know yet, but that's just could be an option. And then we have to start thinking more about the hedging and the purchase side and selling side and the currencies. Credit risk with the end users. It's a massive issue in some of the areas, actually, not all the areas. And the oil price increase may increase, could be another challenge. Poor distribution have low barriers to entry. And then we have seen recently, probably not the last 2 years, but 2008 onwards, 2009, 2010, post-crisis time, that the mills started developing their own distribution assets, trying to make better margins, getting closer to end users and working on lead times. And the clients on the other side are attempting direct sourcing. The rising cost of resources, availability of human capital, having too many players in the market, especially trade side, are the major challenges for the industry. What are the major ones? Despite demand growth witnessed during 2010 and 2011, growth in steel-making capacity still exceeds steel demand. I think we're discussing today that the overcapacity in China, there's now significant overcapacity, and the view could be maybe more, could be not, but could put more pressure on the operators' profitability. This has been driven by European debt crisis, which reduced confidence in the marketplace in the second half of 2011 onwards on global economic growth, putting a halt on investment into large-scale infrastructure projects in Europe and reducing availability of capital for growth. The complexity of this issue is large, as growth in steel-making capacity is expected to continue at pace, and political issues are preventing a resolution timeframe will be driven by the political agenda, with overcapacity being the most significant challenge in the sector today. For steelmakers, not only does the performance vary significantly across both emerging and developed markets, but a considerable cause of volatility is the cost of raw materials. The shortage of these supplies in the market has allowed suppliers of iron ore and met coke, for instance, to rebuild the pricing mechanism through the shift from annual to short-term price contract. This has created challenge for steel makers who are based on iron ore, and they must now deal with volatility in raw materials prices, which has a direct impact on long products market as well. Steel production there is no doubt that is shifting from mature to emerging economies. There are fewer domestic growth prospects as well as increased competitive threats for steel players who are with established footprint in Europe or North America. Both Europe and North America show a weakness in both GDP and industrial production, as GDP growth was less than 2% in both 2011 and 2012, despite 7 to 8-9% growth in India and China, respectively. The Indian sector is striving to put on more capacity to capitalize on that growth. In China, however, there is already significant excess steel-making capacity, and China crude steel capacity was almost about 20% in excess of expected 700 million tons of consumption in average in 2012. Last but not the least would be the main risk to the forecast, which is instability in the lack of clarity about the future political transition in the region. Thank you, Chairman. Let me stop here. Thank you very much for your attention.
Thank you very much, Mr. Hami. Any questions for Mr. Hami? Actually, I have got one very quick question. You mentioned that Egypt will be a net importer of steel, particularly, I guess, rebars. How would you evaluate the recent actions of anti-dumping duties, introducing anti-dumpings in Egypt, taking into consideration that they are going to be a net importer?
I think what I said first, good question actually. I think the announcements itself may not have the solid ground, but when we look at long term in Egyptian production, considering the expansion plans of about 1 million ton with Suez and Ez and the other Misr, so we put out all the numbers. put all together with GDP and about 80 million people, Egypt is not an good alternative for production because of the expensive power cost there. And I think demand on a long-term view, which I said, will be higher when the government can reform properly in that country. So it would be a very good market for all of us. On top of that, I think geographical-wise, Egypt could be have a key role. Remain actually, they have been, but once things get more stable there, on all areas, politicians, payment terms, and all, I think things get better.
Okay, thanks very much. Any other questions from the floor? No, I guess. So in the next session, we will have the chance to listen to Mr. Phil England, the CEO of World Steel Dynamics. Is going to be sharing the World Steel Dynamics analysis and forecasts on the steel industry. So let's have a break until 5 p.m. and let's try to get together here by 5 p.m. in order to have the chance to listen to Mr. England. I would like to thank all the distinguished speakers for sharing their opinion and expertise with us, and thank you for your interest and participation. Thanks.
Thank you.